Hi, this is Kirk with Forex Strategy Secrets, and what we want to discuss with you today is how to find the money trades. What do we mean? What do we mean by money trades? Well, that's the trades where you're actually going to make a lot of money. The lot size can be the same whether you make a little bit or a lot. The lot size can be the same. So if you're trading a dime, or if you're trading $10 per trade or $20 per trade, there are two standard lots. You're still going to be able to use this system, and it should be able to uh, not go against you very far. So we're looking for high probability money trades. Here is a chart. This is a 1 minute chart. First of all, I'm going to ask you the question, and you already know the answer to this. Is this an area you want to be trading? No. So we're going to go to a larger time frame. Now, first of all, before I go to larger time frame, I want to show you the Norwood Strategy Scanner dashboard. And on this dashboard, this is the different choices of the scans that you can have. Now, so what we want to do is we're going to demonstrate this scan right here. It's the 1 hour. It needs to be a 4-bar, and we'll explain what that is as we go along. The 15-minute has to be a strong zone, and the 5-minute has to be a filter cross. And so we'll go through what that means. The scanner does all that work. So once that criteria is met, then you get a scan. Now, does that mean take a trade? Not necessarily. It means, certainly it means heads up, go take a look, and then you can see whether you want to take a trade or not. So that's what we're going to be talking about. There is one other scan that many people like, and it's based on the 4 hour, 1 hour, 15-minute. Now, when that information sets up, then you may say, okay, I like that. I'm going to wait for this one to go off. Once they've both gone off, then you're really headed in the right direction. They might go off very close to the same. The 1 hour one might go off first, but this would confirm it, and then you can trade whichever way you want to go. These two are the two scans that we use that to help us find which direction that we're going to be trading. So let me close that, and I want to go to the 1 hour. This vertical line right here is what we're going to be using as a reference point. And why I put that line there is because that's where I start trading. That's my beginning of my trading day. Other people are starting a little bit earlier than that. So what do I look for when I'm going through the day? Right there. I'm just going to start at the top of my list. Would that have been a place I'd wanted to look? Possibly. I'm looking for which direction it's headed, and this one I would want to wait until this filter is on the right side. It is, has to be a 4-bar. 4-bar means these three indicators on the bottom and this one on the top all being the same color in the right side of the line in the right side of that moving average. That says, oh, that's the direction I want to trade. I mean, look through some others, and you can see whether you'd want to take any of those others or not. This one, not so much at the beginning. It's on the right side of the moving average, but it was on the wrong side of this, the wrong colors. So that says, no, I don't need to do a look there. Did it come into compliance later on? Yes, right there, it met the criteria. And here's another one that was met the criteria right off the bat. And here's another one that wasn't quite ready. That was on the not wrong side, but it did become into compliance pretty quickly. This one possibly may not be trading at all from that time because it's still on the opposite side of that moving average. So you get the idea. So as I went through the pairs today, there were 5 that ended up, but some of them were not ready right at the beginning. So I'm going to go to the pound CAD, a 1 hour chart. Yes, it was a 4-bar. Everything was correct side, correct color. Everything looked great on that. Then I go to the 1 minute. Now, why am I going from the 1 hour to the 1 minute? There's a specific reason that I want to show you. We're looking for one specific thing. I'm not worried about bars or colors or anything. I'm looking for the pattern. The pattern. This is the 3 moving averages in that order. You can change the colors. That's not important. This is the colors that I use. So the larger moving averages got to be on top if you're going short. The middle has got to be in the middle, and the smallest moving average has got to be on the bottom. When that pattern happens, then and we've determined from the 1 hour, then that's the direction I'm going to be trading. Okay, let's go look at another moving average or a pattern setup. It's the same time over here. How's that pattern? Some people say, oh, there was a trade right there. Well, yeah, 29 pip trade if you'd stayed in the whole time up to where it started crossing, coming back down. But that is really difficult to trade that kind of a pattern. So you want to look for a pattern that, see, that pattern's good, but it had to wait until it got set up. Then there was a little bit of a trade here. It went out of compliance, and then it came back in. It's still not the best pattern right here, but there was a good trade that happened there. And then once it's in the pattern, then over here you can start trading. And so why do we call these the money trades? Well, look at this. The way we determine how to trade is what we've just showed you, but the lot size can be whatever you're using. It doesn't have to be something that you say, I'm going to only trade a dime because I'm afraid but if you have an account that's pretty large, $20,000, $30,000, you can trade a larger lot size. Maybe you decide you're going to trade 3 standard lots or $30 per trade. You can still do it. The way, if you do this right, it's not going to go against you very far. If it does, then you get out of a small loss. See right there's 30 pips times $30 over $900 in that if you just stayed in that one. And this is not the best one that we will look at or have looked at. Okay, this one was not in compliance up here. It wasn't one that I would want to really spend a lot of time on because there were some others that were ready, but it did come into compliance later on. And so from here down to here, now we're looking in the past, but can you tell that these moving averages didn't jump around? They weren't crossing back over one another. That gives you the direction. If you hadn't taken the whole trade, there were trades that you could have taken here for 15, 16 pips, 11 pips, or another 25 pips. It went sideways. You could have stayed in that for almost 40 pips. So there's a lot of pips to be made. And that's why we call them the money trades, because you're trading in the direction of the 1 hour chart. And we showed you what to look for there. See, this pattern was not right for a while, and it came into compliance later on, about the same time some of the others we've looked at, but it just did it at a different pace. Now notice the pattern again. Once from right here on, it becomes easier to trade. You have more confidence in the move. And then I'm going to show you the other scan. Once one of these larger scans goes off, we talked about down here, then you can look at it and say, okay, that's set up. I want to look at something else. Then you can do a couple different things. This is a very good one. It's the 15-minute and 5-minute, and I'll show you exactly what that is on the chart. Has to be on the correct side of the filter 0 line, and the 1 minute has to be a 4-bar on the correct side of the moving average. So then you would say, okay, I'm going to leave that on in case it happens again, but since it did happen, now I'm going to have this bring it to my attention. If when I look at it, you don't see it, then you can set the scan and have it bring it to your attention a little bit later. Okay, right here, the 1 hour was correct, and we went right to the 1 minute, and it was good. And so I'm going to go back and say, okay, now is the 15-minute setup. Is what we're wanting. The 15-minute is all it has to have happen is be on the correct side, the right color here. Red on the short side or black on the top side, right at that point on the 15-minute. The 5-minute has to be exactly the same. And it had to wait 5 minutes before the scan would have possibly gone off. Now, the scan has only met 2 criteria. It has to meet the 1 minute as well. And the 1 minute has to be 4-bar. 1, 2, 3, 4, all the same color. So right in there, you would receive a scan. So we set it and it waited 5 or 10 minutes and then it went off. Now at this point, do we know how big the trade is going to be? No. It went 20 pips. That's a decent trade. There were some exit signals you could have gotten out. I don't know if it would have given you another scan, but sometimes it does and sometimes it doesn't, because it already is saying I gave you one for that area until it really retraced here. Now let's look at this line. We've had maybe 1, 2 trades there in and out, and we've looked at some other pairs. Go back to the 1 hour. It says it's good. The 15-minute didn't like that. It said, okay, I got to wait until it's correct side, correct color. The 5-minute, it says I have to wait till it's correct side, correct color. So it waits another 5 minutes. Now the first two criteria have been met. Let's see if the 1 minute's ready to give us a scan at that point. No, it's not. It said it had to wait right there. That's where you would receive the scan. And there's a good, easy over 100 pips right there before there was any major slowdown or change. Notice what you see? Look at that pattern. That's how you find the money trades. You find the direction you're wanting to trade. You then look to see if the smaller time frame is lining up properly, and then you can set another scan to bring it to your attention. Now, we were looking at, I figured there's 4 to 5 pairs that I've been watching. They all didn't hit at the same time. We might have been trading this one, and there's one other one that may have been ready. Let's leave the 2 lines here and see if this other one was ready at the same time. It was ready over here, and it gave you a nice 20 pip move. But over here, it took a little bit longer. It took I don't know, half an hour more. I'm just rounding it up. And so then there's a scan here, and you had another nice move in and out of the move. But look at the pattern. Once the pattern really gets close, this was not exactly right, but it was close enough that I would take it because it was right over here, little retracement, and the pattern starts looking good again. And so the different scans go off at different times, and that's how you could be in a trade and be moving along very nicely, and then have another one go off and take another trade. That's what I've shown you is the manual visual looking at it, and I've shown you a tool, our Norwood strategy scanner, that you can set to bring up these different scans you may want to use and the sequence you can use them in. So you don't have to have all of these little small time frames going off all at the same time. Wait until you get some direction on the larger time frame. For those of you who do not have the Norwood Strategy Scanner and would like to test it out, you can subscribe to it, copy this link, and paste it in a browser. So that's how to get subscribed to the Norwood Strategy Scanner. And if you really like this and want to say, well, hey, I think this is good enough, I really want to do this, you can talk to Jed or myself, I'm Kirk, about coaching. You can give us a call at this phone number, or you can send an email to that email address. Jed and I both answer this email address, so you can send it there and get in touch with us and talk to us about coaching and see if you qualify to be a coaching student. Not everyone that wants to will we even let in. There's some criteria you have to meet and go from there. There's a question that says, can we use the 4-hour, 1 hour, and 50-minute charts? Do this very similar. You may not need to be as heavily concerned about the moving average, even though if you have the price bars on one side or the other, that's even better. But there's this big move up and then the big move come down. Well, if you're only waiting, you couldn't trade this direction for 160 pips if you said it has to be on the right side of that moving average. So we're more concerned about the right side, right color right here. Right side, right color, then you can start taking a trade up here. Let's go to the 1 hour now. There's a scan that we talked about. The 1 hour, we want it to be on the correct side of its moving average and the correct side of the filter. Let me bring over that scan again so you can see what this is the scan we're talking about. 4 hour fresh cross. Notice that it wasn't the moving average wasn't included. 1 hour has to be a strong zone, has to be on the correct side of its moving average, and then we'll go to the 15 and show you what that needs to have. And so right here, that all set up. And so that scan, if the 4 hour would have, so far it met the criteria to go off 15-minute. It has to be right there, that correct side of that filter. And so by the time that's met, you're well into it. We're about 45 minutes into a 4 hour bar before that would have gone off. It went off and a nice trade. Let's go, keep on going down. We're saying you've used the 1 hour, 15 and 5. The question is, can you use the 4 hour, 1 hour, 15? Yes. And here's what the 5 looks like at that point. Wait 5 more minutes if you want to use that. And we move that over 5 for the 5 minutes and go to the 1 minute. And there's the 1 minute setup. And that's going from a 4 hour down. Now, does this look familiar? This is one we looked at on this particular pair. And so you can get signals on the 4 hour. And that's why I talked about in the beginning, you can either use the 4 hour and 1 hour as your time frames together, just use the 4 hour only, or just use the 1 hour as the heads up to get you started in the direction that you may want to go. The question is there a trial? No. We will let you come to what we call our Pip Club, and you can watch us do it, watch us trade for 3 days a week, Tuesday, Wednesday, and Thursday. It starts at 9 o'clock Eastern. And for about an hour, you can watch us trade, listen to us, have commentary. You can spend some time. We're giving you access to the beginning part of the course. That's for free. And so study the course if you like that. Come to the Pip Club, see if you like that. If you like that, then it costs $100 a month for the subscription to the scanner to get the indicators and have the trade brought to your attention. If you take it for a month and don't like it, you can cancel it. If you like it, you can keep going on it, but there's no trial. We want you to study it out and decide, and we'll give you enough information. You can decide whether you like it or not. But also, if you subscribe, you have access to a scanner forum. And some very good traders are posting their trades. There's conversations, commentary there that you can really learn what's going on. The question is, where's the scanner forum? You send us your Skype ID, and then we add you to the scanner forum, and then you can see any posts that happen after that. And there's usually quite a few posts going on Monday through Friday, over the weekend occasionally. We've listed here, this is, you want these, you can have these on all the time frames. Notice there's a 2 next to all those, and I've got everything checked on those 2. And so I'm going to go up a little bit. So if you want to select a certain pair, let's choose this one. You got to click over on this side. You can't click on top of the indicator. It's got to be off the side. Then the check mark comes up. It goes to a 3. And let's take this one and click it. And I'll just take that one and click it. Now I have 3. So I don't click flush. That'll put it on all of them. I just click save. You just go back to the pair that you want to take off and highlight it, and then click the button, and it takes it off, goes back to 2, then click save. I'm going to put them all back to 2 because I don't want them all going off. Yes, the market's choppy right now, and from what I just showed you, we have had some really good trades and some good setups, and there were many people that took some trades. And so a lot of the information that happened, let me put some lines on the chart as to what happened in the Pip Club. And then we'll scroll through a couple of pairs so you can see what happened there. This is a 1 minute chart. And so this is about where the things were happening. So right during the Pip Club, there was a 40 pip move right there. Let me go scroll through some pairs. There's another pair. All this took place during the Pip Club. See, that was not really good, easy to trade, so we didn't worry about that one. We showed you how to find that, and this one was right in the middle of that area. This had a little bit of a move, and here's another one that had some movement. All that's in between these two lines happened during the Pip Club. So yes, there's some good trades. Some people don't report their trades, so we don't know. But those that do, we're having some very good success. To use different charts and indicators on live trading, no. We use the same exact, all the charts and indicators are exactly the same live or demo. I just received a scan on the pound dollar 4 hour, 1 hour. So I'm going to mark this where I had a scan that just went off. So I met the 4 hour criteria, which is that is on the right side, right color. 1 hour, it just became a strong zone, correct side of its moving average. And the 15 had to be the color change right there. So that was the scan. Brought that to our attention. See, I've taken a few seconds to get to it. Let's see what the 5 minute did. 5 minute looks pretty good, and one is the pattern not quite right, but let's look at the 1 minute. Did you take that trade? Yes. The pattern's not exactly right, but it's getting close. You can see how this moving average, as soon as it goes across, then it's in the right sequence. And so that scan went off just a little bit ago. It's probably on that bar, and that trade would have been right there had we gotten to it as soon as it went off, and we'd be up 2 or 3 pips. Just right out of that's a scan that came right as we're having this session. And you can decide whether you want to take it or not if you look at it long enough. Now, I would set a small stop loss, and that's covered in the course material. And you can set your take profit out as far as you want. Let's look at the 1 hour again. Okay, so you can set your take profit out whatever you want it. There's some congestion there. There's no science on this particular thing. 80 some odd pips. You take the trade there and you set a small stop loss. That's pretty good risk reward ratio. I don't know what that stop is. I just put it on based on a little bit away. It's about 10 pips, 10, 15 pips. And so if it comes back and takes you out, you've lost a little bit, but look what, the amount that you're going to gain based on what it's doing. Yes, the scanner is attached to your computer, and it's on whenever the market's open, the scanner's has the ability to work. Now, one caution: the scanner, no matter whether you have a small time frame or a large time frame, is just heads up. It's not, oh, I better hurry and take a trade. And so, yeah, sometimes as soon as you look at it, it's ready to take a trade. Other times you have to wait 10, 15 minutes, sometimes 40 minutes before it's ready to take a trade. But it's heads up. You have to visually look at it and say, okay, I want to take that trade. We have videos on all the major scans, and once you learn how to read them, you can figure out what they are. And we have videos on some of the most important ones. So since we got that scan, I just put it, said, okay, this is where the scan went off, and if we'd seen it, we could have taken the trade. And you can see that I put a take profit way out, about 80 pips. And I grabbed and that's about a 6, 7, 8 pip stop, and it's up about 8 or 9 pips already. Has it come back against us? No. Can you tighten it up? Yes, you can. If you're up 10 pips and you're sitting there watching it, I don't think there's any reason that you should take a loss. Close it at 1 pip or enough to cover your spread, and then re-enter. Don't say, well, it's going to come back. I'll wait till it takes off again. No, don't do that. Don't lose money. We're talking about the title is how to find the money trades, not find trades that I can lose on. And so our suggestion is there's two rules that Warren Buffett uses. And some of you know those rules. The first one is don't lose money. The second rule is refer to the first rule. And so my thinking is don't let it go against you. If you got that little bit of profit, take it and then get back in. Or if it goes against you, you're out and you haven't lost anything. For this illustration, in case I get talking and I'm not watching it, I'm going to move this line up and I'll protect whatever that is. I protected 2 pips, 1, 2, 5, whatever you want to protect. It was only 8, 9 pips positive. Right now, we're not going to lose on that trade. The question is, how many strategies do we have for long-term time frames? Okay, midterm to me, 1 hour is long-term as far as I'm concerned. We have a couple of strategies here. If you learn how to read what that's saying, this says Strong's on the 1 hour, the 15-minute has to be on the Mayo, and filter have to be the same side of the zero line. And some of them we have videos on, and those are the key ones. The others just learn how to read what it's saying. This one, 1 hour, 15-minute have to be on the filter zero line, 5 minutes an early bird filter on the correct side of the moving average. Okay, so to me that's long term. Here's what we have title long term. We have 3. This last one was the most recent, and I think it's probably the best. Okay, here's the main strategies that are used multiple time frames before the scan will even go off. We go down here, here's a strong zone, the 1 minute, 5 minute, 15, 30, 1 hour, 4 hour, so forth. That's the strong zone, and that's only using one time frame, one indicator that is going to go off. The reason I don't like those as well is because they can flicker back and forth. When it's right on that mathematical calculation that says here's the scan, you get the scan, you get there, and it's already changed. It's not the right colors and not the right setup. So I don't use those as much. Then here's the weak zone. Here's an early bird filter. And the cross of the filter line cross, all the different time frames. So you can see we have a lot of scans. Not all of them are as good as the ones that I pointed out to you. This 1 4 hour, the 1 hour 4 bar, and that one, the 15-minute filter zero line. So those are the ones you can use that we've fine-tuned to be the best. And I've shown you a combination of how to use them, find the direction, and then find the money trades. And then you have to trade the money trades. And we've shown you how to do that. I'm looking at this trade we got on. We've protected 2 pips. How much are we up? Oh, we're up 8 pips now. Now, I'm not saying that every trade is going to be a home run. That would be untrue. But are we going to lose on this? No. We've already, it happened right during this session. You could have actually taken that trade, and the worst we're going to do is make 2 pips. And if I managed it differently, had a trailing stop, or else it can, right now we'll make 2 or we'll make 80. It may not go to the 80. I just stuck that out there. I'd rather manage from behind than leave my stop negative if it comes back against me. Okay, look what's happening here. Our trade is coming back. It went up in our favor, maybe 11 pips. It's coming back. So if it crosses that, that means it closed if we had taken the trade. This is just an illustration. And the pattern just barely got started too. And many times when it first starts, it comes back and touches. We'll just let it run and see if it would have taken us out.